Tax offenses and penalties. The Nigerian Revenue Service can sell your business without your consent and without a court order. Dear friend, yes, you heard me very well. The Nigerian Revenue Service can sell your business and its assets except immovable property where the tax due from you and your business has become final and conclusive. And this is even without your consent or a court order. Section 61 of the Nigerian Tax Administration Act 2025 empowers only the Nigerian Revenue Service and not Lagos State, Kano State, Enugu State, or any other entire revenue service in Nigeria to do this. Friend, you see, the new Nigerian Tax Act are very good. They are pro-poor, pro-low income earners, and progressive. The more you earn, the more you pay. In the last video, we showed you how you can significantly pay less tax simply by harnessing the 103 tax incentives contained in the new Nigerian Tax Act 2025. That is massive. And if you calm down and follow us, you will pay little or no tax, legally and ethically. But if you try to be oversmart or clever, my brother, you may inadvertently cause yourself so much tax wahala. Let's explain with an example. If your business has an annual gross turnover of, say, 48 million naira with total fixed assets of, say, 245 million naira, you are both a small business and a small company. Consequently, you don't charge, you don't collect, you don't pay, you don't remit VAT, and you don't pay company's income tax and development levy. That is beautiful, right? But if in a bid to reduce or evade tax, you declare that your annual gross turnover is, say, 28 million, and thereby fail to disclose the balance of 20 million, if the tax authorities catch you, you will pay a penalty of not less than 8.9 million naira on the undeclared turnover of just 20 million naira. And this is notwithstanding that you are supposed to be tax free. So what do you do? Simple. Obey the golden rule of tax freedom, which we will show you shortly, and you will be free. In this video, we provide you with a valuable insight into the anatomy and list of tax offenses and penalties in Nigeria. In addition, we will show you the golden rules, the general rules, and the silent principles of taxation to assist you. These golden rules include the golden rule of tax freedom, taxability of persons, taxability of incomes, taxability of supplies, deductibility of expense, and others. All you need to do is to just follow us as we release these videos for tax education. And to get the videos hot and fresh, kindly like, subscribe, hit the notification button now, and share so that as many people as possible will be notified and sufficiently educated, and your life will never remain the same. So, what are we going to learn in this particular video or compass? You're going to know the golden rule of tax freedom. We are going to make very important clarifications. You are going to understand what exactly are tax offenses and penalties. And we are going to see the key tax offenses, including failure to register for tax, failure to obtain a tax ID, the almighty tax ID, failure to file returns, failure to collect or deduct tax, or if you collect, failure to remit or pay tax, failure to pay final and conclusive tax, falsification of documents, false claims for refund of tax, failure to use fiscalization system, failure to attend to demands and notices, obstruction of the tax process, aiding and abetting inducement, impersonation, use of weapon to attack a tax officer, failure to pay duties on property, plant and equipment and expenses, the implications, stamp duties, offenses and penalties, petroleum operations offenses and penalties, surcharge offenses and penalties, some tips on how to avoid offenses, list of the 20 interdependent compasses, and more about tax corp and the authors. Now, the question is the golden rule of tax freedom. I know you have been waiting for this, but let me ask you a question. Dear friend, do you want to be free from tax wahala? No disturbance of your sleep by a taxman, no knocking at your door by a tax lady, no receipt of long queries by your business from a tax controller, no receipt of unsolicited reminders or threats by your company, no blocking of your bank accounts by the tax chairman, no barging into you by law enforcement officers, no forceful entry into your business premises by enforcement officers, no threats of imprisonment by a law court, no selling of your business and or its assets without a court order after tax has become final and conclusive by the Nigerian Revenue Service. Do you want all this? Do you want freedom? If your answer to this is a capital yes, then obey the golden rule. And the next question you will now want to ask is, what is this golden rule? Friend, it is very simple. The golden rule is the three C's. And what is the three C's? Comply, comply, and comply. Now, important clarifications and definitions. Some people have been mixing it up, small company and small businesses. They've been lacking proper understanding. So here, we are going to make this clarification, including who is a taxable person. Section 202 of the Nigerian Tax Act states inter alia that a taxable person includes a company, individual or body of individuals, family, community, corporation, so trustee, executor, or any other legal arrangement, or any person who earns income or carries out an economic activity. Please note this. It says any person who earns income or carries out economic activity, and the act did not say or specify that the person must be in Nigeria or be a Nigerian. So long as you earn income or carry out an activity, whether in Nigeria or abroad, you are a taxable person. Similarly, the same section 202 of the Nigerian Tax Act states inter alia that a small company means a company that earns gross turnover of 50 million or less per annum with total fixed assets not exceeding 250 million, provided that any business done by a consultant is not a small company. In the same vein, Section 147 of the Nigerian Tax Administration Act states inter alia that a small business, now this is a small business, not a small company, means a business that earns gross turnover of 100 million less or less per annum with a total fixed assets of less than 250 million, provided that any business providing professional services shall not be classified as a small business. So you see the distinction. A small company is just 50 million naira turnover, while a small business is 100 million naira turnover. Meaning that a small company can be a small business, but a small business cannot be a small company. What exactly are tax offenses and penalties? You want to know. Tax offenses are acts, conducts, or failures that violate or contravene tax laws and are punishable by fines, penalties, imprisonment, or a combination of these sanctions. These offenses can range from minor administrative errors to serious criminal acts intended to deceive the tax authorities. Tax offenses include tax evasion, tax fraud, failures such as failure to register for tax, failure to file returns, failure to charge, collect, or withhold tax, failure to pay or remit tax, uh, not keeping proper records, aiding or abetting commission of tax offense, inducement and impersonation tax officers, obstructing or fighting tax officers or injuring them. Tax offenses are committed by taxpayers, tax officers, and other persons, not just only tax payers. Tax penalties are the consequences, sanctions, or punishment for tax offenses. They range from light administrative query, caution, fines, and penalties to years of imprisonment or a combination of them, and which we know you don't want to get into. Now, the specific offenses and penalties are as follows. First is failure to register for tax. A taxable person who fails to register for tax, except where exempted, is liable to two administrative penalties as shown below. The first is this: a penalty of 50,000 naira in the first month in which the failure occurs. 50,000 naira in the first month in which the failure occurs. Second, a further penalty of 25,000 naira for each subsequent month in which the failure continues. Illustratively, if you do not register for VAT for 3 years, say from 2026 to 2028, the cumulative administrative penalties will be as follows. In 2026, you will pay just 325,000. In 2027, the second year, it will rise to 625,000. And in the third year, 2028, it will rise to 925,000. And this is just penalty for not registering for tax, penalty. Other sanctions are there. Next is failure to obtain and possess the almighty tax ID. You have been hearing of tax ID, tax ID. Now, the consequence of not obtaining it. A taxable person who fails to register and obtain a tax ID is liable to 5 administrative penalties as shown below. First, you cannot do business with anybody, including government and their MDAs. Second, you cannot do business with any financial institution, including opening and operating a bank account, insurance companies, fintech companies, stock exchange companies. Third, you cannot own a house, so you can't have C of O. You can't own a gun. You can't have import, export, or trade license. Fourth, anybody that does business with you is in trouble because the person will pay a penalty of 5 million. And also, if you do business with somebody who does not have a tax ID, you will pay a penalty of 5 million. Now, failure to file returns. A taxable person who fails to file returns or knowingly files incomplete or inaccurate return is liable to 2 administrative penalties as shown below. First, a penalty of 100,000 in the first month in which the failure occurs. Second, a further penalty of 50,000 naira for each subsequent month in which the failure continues. Illustratively, if you register for VAT but fail to file VAT returns for 3 years, for instance, 2026 to 2028, the cumulative penalties will be as follows. In 2026, you will pay just 3.9 million. In 2027, it will have risen to 11 million. And in 2028, you will pay a minimum of 18.3 million and more. And please note, this is just for not filing returns, so other penalties are there. Next is failure to collect, deduct, or withhold tax. A person who fails to collect or deduct or withhold tax is liable to 4 penalties, as shown below. Here, please note, the Act is referring to VAT, withholding tax, and others. The penalties are: 1. The amount of tax collected, deducted, or withheld you will pay. Second, an administrative penalty of 40% of the amount not deducted you will pay. Third, an administrative penalty of 10% per annum of the amount not deducted you will pay. Fourth, interest at the prevailing Central Bank of Nigeria monetary policy rate you will pay. Failure to remit tax collected, deducted, or withheld as source or self-account. A person who collects, deducts, or withholds tax and fails to remit it to the relevant tax authority within the 21st day of the subsequent month, or a person who is required to self-account fails to self-account within the prescribed time to self-account is liable to 5 penalties as shown below. First, the amount of tax collected, deducted, or withheld, but not remitted, or in the case of self-accounting, the tax not self-accounted. Second, an administrative penalty of 10% per annum of the amount of tax collected, deducted, withheld, but not remitted, or in the case of self-accounting, not self-accounted. Third, interest at the prevailing Central Bank of Nigeria monetary policy rate. Fourth, on conviction, you can go in for a term of imprisonment of no less than 3 years or a fine not less than the principal amount due plus penalty. What is penalty of not more than 50% of the sum? Fifth, both imprisonment and financial penalty. Failure to pay tax, which assessment has become final and conclusive. Where an assessment has become final and conclusive, a demand notice has also been served on you and the person fails to pay tax within the specified time. The tax authority can do the following, can take the following 4 actions. 1, it can distrain the person or corporate body by their goods, chattels, bonds, or other securities. Second, it can distrain any land, premises, place, or any asset owned by the person and recover the tax by itself. Third, the Nigerian Revenue Service may keep the distrained asset for up to 14 days at the cost of the person or corporate body. And if that after 14 days the tax is not paid, the Nigerian Revenue Service can sell those distressed assets without your consent or a high court order. Now, counterfeiting, falsification, and forgery of documents and information. Counterfeiting, alteration or falsification of documents, seals, signature, marks, initials attract three penalties, and these penalties are administrative penalty of 1 million, on conviction, imprisonment of not more than 3 years, a fine of 1 million naira or both. False declaration of document attract 4 penalties. Administrative penalty of 1 million. Second, payment of undercharged tax. Third, on conviction, imprisonment of not more than 3 years or a fine of 1 million or both. False or fictitious claim of refund of tax or VAT. False or fictitious claim of receipt of tax refund. When you fraudulently claim tax refund, you will be there are 3 penalties. First is the amount you falsely received. Second is 50% of that amount. And thirdly is the interest on at the prevailing central bank rate. False or fictitious claim and receipt of VAT refund. You have 3 penalties. One is the recovery of the amount falsely received. Second is the penalty of 100% of the amount falsely received. And third is interest at the prevailing CBN monetary policy rate. When you fail to fiscalize or keep accounting records, here are the consequences and penalties. Failure to process a taxable supply through the fiscalization system of the Nigerian Revenue Service attracts 3 penalties, and they are an penalty of just 200,000 naira, 100% of the tax due, interest at the prevailing CBN monetary policy rate. Failure to keep accounts, proper accounts, books, and records for your business transactions, or failure to submit, provide information when required, attract just one penalty. If you are, if the person is not a company, then you just pay 10,000 naira. But if it's a company, you pay 50,000 naira penalty. Failure to attend to demands, notices, or provide sufficient information attracts 2 penalties as shown here. Administrative penalty of 100,000 in the first day of default, then 10,000 for every subsequent day where the default continues. Failure to supply information, documents, or record demanded by the tax authority attracts 2 penalties. Administrative penalty of 200,000 naira in the first day of default, then 10,000 for every subsequent day where the default continues. Obstruction of the tax process or refusal to grant access for the fiscalization system. Obstruction of the tax process attracts 3 penalties, and these are a penalty of 1 million naira, on conviction, a fine of not less than 1 million naira, and 3 years imprisonment or both. Failure to grant access to deploy the fiscalization policy attracts 2 penalties, and these are a penalty of 1 million naira for the first day and 10,000 for each subsequent day that the default continues. Inducement, aiding, abetting, impersonating an authorized officer, a tax officer. Inducement, influencing, or enticing a tax officer attracts just 1 penalty. Where the offender is an individual, you pay a penalty of 500,000. But where the offender is a company, for inducing a tax officer, you pay a penalty of 2 million naira. At aiding, abetting, or inducing a tax officer attracts 2 penalties, and these are on conviction, a fine of 1 million naira or 3 years imprisonment or both. Impersonation of an authorized officer attracts 2 penalties. On conviction, a fine of 1 million naira, 3 years imprisonment or both. Now, when you use a weapon to attack a tax officer, here are the issues. Commission of a tax offense while armed with offensive weapons attracts just 1 penalty. On conviction, to imprisonment not exceeding 5 years. But if you, in the process, you injure the tax officer, the penalty moved from 5 years to 10 years. Failure to pay VAT duties on and withholding tax on assets and expenses. Now, if you fail to pay VAT, duties on an asset, the penalty is that that asset shall not qualify for capital expenditure. It will be disqualified. And if you fail to pay VAT, duties, or levies on expenses, that expense shall not be allowed as a deduction in ascertaining profit or loss. Therefore, you pay more tax. Stamp duty offences and penalties. Failure to stamp dutiable instrument attracts three administrative penalties. Payment of the amount of duty not paid, 10% of the amount of duty not paid, interest at the CBN monetary policy rate. Now, failure to fully disclose all the facts and circumstances relating to dutiable instruments attracts four penalties. Payment of the amount due, an administrative penalty of 100,000, on conviction, a fine of 50,000, 3 years imprisonment, or both. Stamp duty offences also include if you forging or reusing of already used stamps attracts two penalties. On conviction to imprisonment 3 years, a fine of 2 million naira, or both, just for reusing already used stamp. Petroleum operations include the following issues: offences and penalties. Failure to file estimated and actual returns on due date attract 5 penalties. One is 10 million naira on the first day. Second is 2 million for each subsequent day the failure continues. And third is any sum prescribed by the minister, interest or the prevailing SOFR, 10% points for the differential of the revised tax over the estimated tax. Failure to pay royalty, pay tax, remittance on the due date attracts 7 penalties. It attracts the tax, royalty, or remittance becomes a debt. Federal government will now say, now that amount you didn't pay has become a debt, and government can take any action to recover the debt. The amount of tax, royalty, or remittance not due, a sum equal to 100% of the amount payable shall be added to the tax not paid. In case of a foreign currency transaction, the tax, royalty, or remittance due shall incur interest at the prevailing SOFR or any other successor rate plus 10%. In the case of transactions in naira, the tax, royalty, or remittance shall incur interest at 2% above the prevailing CBN monetary rate. The licensee or the lessee shall be liable to 10 million naira, or equivalent of $. 2 million naira, or equivalent of $, for each day in which the failure continues. The Nigerian revenues can distrain the licensee or the Z of his oil well, crude oil, etc. They can cancel, revoke, seize, distrain, or dispose the licenses or rights of the holders. Preparation of incorrect or false accounts, schedules, statements, or misleading information attracts 5 penalties. An appropriate tax which would have been charged at a penalty of 15 million, 1% of the amount of tax which the person is liable, on conviction to a fine of 15 million naira, 1% of the amount of tax which the person is liable. False statements, false representation, returns, accounts, aiding and abetting, unlawful refusal or neglect to pay tax attracts 4 penalties. Appropriate tax which would have been charged, and the penalty of 15 million naira, or 1% of the amount of tax which is liable. On conviction to a fine of 15 million naira, 1% of the amount of tax for which the tax is liable. Failure to file surcharge. These are now surcharge offences and liabilities. Failure to file surcharge returns or comply with the provisions of the Surcharge Act attracts 1 administrative penalty, just 1, but it's huge, 10 million naira. Failure to pay surcharge as provided in the Tax Act attracts 3 penalties. 1 is amount of the surcharge due, 2 is 10% of the amount payable, and as usual, 10% interest at the prevailing CBN monetary policy rate. Some tips on how to avoid offences and penalties. Now, distinguished ladies and gentlemen, Now I want you to pay close attention to some of the tips that you can adopt to avoid these offenses. First is, please know your tax law well. Not just your tax advisor or tax corp. You should also know your tax law very well. Be proactive. Seek advice timely where necessary. Keep a comprehensive register of all tax compliances. Regularly and periodically check compliance on compliance list. Where feasible, have an automatic check of your compliances. Register for all registerable, including tax and VAT timely and correctly. Charge all chargeables. Collect all collectibles. Pay all payables. Balance all balanceable. Remit all remittable. Comply with the fiscalization policy. Keep a comprehensive and accurate record of all your business transactions. They will be required. Accurately complete and timely submit all returns monthly, quarterly, half yearly, annually, on or before the due date. Most importantly, please regularly consult or hand over your compliance matters to Task Corp. It's now your choice. Friend, you have seen the key offenses in Nigerian Tax Act and the potential consequences, sanctions, punishment, and penalties. You have also seen our advice on how you can avoid them and be tax-free. It is now up to you to take the appropriate action. The assurance is here. Tax Corp is always available to assist and support you. Structure and plan your business affairs with a view to reducing your tax legally and ethically. Below is the 20 interdependent compasses and more about Task Corp and authors. So you have seen the 20 interdependent compasses. All you need to do is just to look at them, and anyone that you desire, please just go and select. And if you need more clarification on any particular matter on tax, please just come over or contact Task Corp and we'll help you do that. Now, about Task Corp. Task Corp is the Nigerian tax consultancy firm which specializes in tax matters. Prince Chidi, FCA, FCTI, MBA, is the principal consultant. Prince Chidi is a licensed fellow of the Institute of Chartered Accountants of Nigeria, ICANN, and Chartered Institute of Taxation, CITM. Tax Corp and Prince Chidi have provided tax services to numerous individuals and corporate bodies in both the public and private sectors, locally and internationally. Since 1990, my brother, that's over 3 decades. The beneficiaries include the Federal Land Revenue Service, which you now call the Nigerian Revenue Service, Revenue Mobilization Allocation and Fiscal Commission, RAMFAC, State Internal Revenue Services, including Lagos State, Abia State, and many more, including the Federal Capital Territory Internal Revenue Service, FCTIRS, and many private companies and individuals, which we can mention here. So you have the details of how to contact Task Corp, and please, because we have so many videos we want to use to educate Nigerians, so we want you to like this video, we want you to subscribe, hit the notification button now, and share to as many people as possible, because we want this thing to go viral. We want everybody to know and be very confident on the implementation of the new Nigerian Tax Act. Thank you so much.